This is screaming to us that there is a significant difference between price of Bitcoin at the moment and the sort of fair value. And right now, I think we have more than 200 graphs and counting. A lot of whales cashed out last year. They capitulated, but who did they capitulate to? Doomer scrolling, dopamine hit society, Bitcoin doesn't feel like a get-rich-quick thing anymore.
Supported by IGRA Labs, Atomic Programmability on a Casper blog tag. Cascade. Use your Casper without selling it.
Today, I'm joined by Tristan, founder of Apollo Analytic. Welcome, Tristan.
Hi, Ankit. It's a pleasure. I'm looking forward to this one.
Awesome. So let me just quickly do a quick intro. So Apollo Analytic, right? We'll get into your background, but Apollo Analytic is a professional grade Bitcoin analytics platform, right? That's how I got to know, right?
Correct.
Typically, Bitcoin traders and investors look for on-chain data from the crypto-specific tools, right? And then they go out looking for macro data from macro-specific providers, right? Other providers that provide that specific side of things, right? Now, with Apollo Analytic, you guys have combined both under one roof, right? So on-chain metrics like HODL Wave, stock-to-flow, hash ribbons, like lots of amazing stuff we're going to discuss today, along with key macroeconomics indicators like Fed balance sheet, treasury yields, amazing stuff. But let me start with this simple question, right? How do you define yourself, Apollo Analytic, in your own words?
So we are a crypto and macroeconomic data analytics provider. So we don't provide any crypto investment services or not an exchange. I think I come from a quantitative background, and I was frequently finding myself trying to look for a graph here or a graph there. And I think it was born out of a frustration to sort of constantly be building a mosaic from different websites. We decided to have everything in one place. So the ambition right now, I think we have more than 200 graphs and counting, and we have some very unique indicators, both for cryptocurrencies and Bitcoin, but also for macroeconomic indicators. And I think institutions, funds, and sort of, one-man bands, guys that are trading in their own time, they can use our data to make decisions. Obviously, we don't offer investment advice, but the indicators that we have can inform for trades. And that's exactly what I've been doing in my own time, and that was why the business was born. I've been trading for many years now, and you try and pick an indicator that can help you get an edge. Even I think for commentators or guys on the sidelines, analysts, etc., I think it's useful to see like what could potentially be happening to Bitcoin going forward. We've got a lot of interesting graphs on the agenda, and hopefully I can support my contention that we have some good data.
Yeah, no, I think, and that's why I got excited, because I think, I'm going to put it bluntly, right? Crypto is flooded with hype and narratives, right? Unfortunately, there's a lot of hype, a lot of narratives. Sometimes narratives are good and narratives are very important. But I think the hype side, without the data, sort of loses its path, at least for me, right? I wanna see some good data, right, to tell a story. So that's why I got excited, and that's why I wanted to have you on the show, to really get to see the data myself, but also to discuss these amazing sort of different data points you have.
Data indicators are all over the show, but we try to have niche indicators, niche graphs that you won't find on TradingView. I come from an actuarial background. I'm like an Excel nerd. I mean, I have a math degree essentially, so I can work with this stuff first principles. And our team also has some key graphs that we developed in-house that I think can can drive greater insight.
Yeah, beautiful, beautiful. So let's get into the data side, and I'm gonna throw some questions at you, and then
Perfect.
let's see how you can substantiate them with some data. Let me ask you this thing, right? So, what signals are you watching in Apollo Analytics, you yourself, right? Are we heading upside? Are we going downside? What are you looking at yourself?
You have to keep the basic macro and geopolitical backdrop in mind even before you jump into indicators. I think one key connection that you always need to follow is that Bitcoin is correlated with S&P 500. There's actually a deeper correlation indicator that we have on our website. I'll pull up the demo shortly when we talk about some of the pertinent momentum and directional graphs. But that indicator is that Bitcoin is correlated with tech stocks. It's a risk on asset for all intents and purposes. Interestingly, it still seems to function as a sort of inflationary hedge, which, I mean, coincidentally, I would say equities, especially US equities, also serves as an inflation hedge. So I think
It's
a
the
lot of
same
people,
thing. Yeah.
exactly, they would perhaps assault Bitcoin as not being an inflation hedge, but it's correlated with risk on equities. So, which is an inflation hedge by definition. So
Well,
just
can I
keep,
ask? Can I ask?
yes,
Like, I think what you're saying is so important. I think people need to understand that Bitcoin is considered to be inflation hedge, within the Bitcoin communities, right? So I wouldn't mind you actually explaining to people what that means to be correlated to S&P.
yes, that's perfect. I can break down the sort of more basic layman's concepts. So essentially, the S&P price will pull the Bitcoin price in the same direction. And I believe the correlation is fairly high. It does fluctuate between about 0.7 and there's been times where it's been 0.9. So a one-to-one correlation between two prices or two graphs, because we're looking at a price graph essentially, a one-to-one or a 100% correlation would mean that the price graphs move in lockstep. It's identical. And the closer you are to 1 in terms of a statistical correlation, or rho squared for the nerds out there, the closer the graphs move over time. Bitcoin and S&P 500, and then again, I talked about this alternative indicator where you look at some tech-heavy ETFs, which actually demonstrates a higher correlation with Bitcoin than just the whole market, which is fascinating. And again, something that can be traded. This is not investment advice. But yes, ultimately, they have a higher correlation and they move in lockstep together.
Yeah.
And that's the definition.
That's beautiful. That's beautiful. And I would add a little bit more. I think I was looking at the data other day. Correct me if you happen to know this. 29 companies or 34 companies, something like that, were representing majority of S&P. Very small number of companies actually represent majority of S&P. So what essentially you're saying is actually it's not just even S&P. It's like handful of company can be correlated.
It's the tech stocks. I mean, there's obviously these kind of fund managers globally have these categories that are hot. I mean, it used to be FANG, and then it changes every year. Right now, it's all about AI, obviously. So a lot of the big incumbents, obviously like Google and Meta and Amazon, actually, which is a bit of a dark horse that people aren't following, have incredible data centers. So whilst OpenAI and Anthropic are sort of leading the charge in terms of, I think OpenAI is hands down leading the consumer market versus Anthropic is killing an enterprise, they will run into compute or data center capacity walls. And the big dogs, Google, Meta, Amazon, Microsoft, they have the data center capacity. So that puts them in the lead. And obviously, I don't know, equity valuations right now is who's going to perform well in AI. That's what's incredibly hot right now. That's the new wave. So sorry, just pivoting back back to your initial comment, yes, I think most of the growth in the S&P is sort of driven by this tech sector, and has been for some time. There's a lot of criticism about, the weighting of the index, or sort of economic growth at large, because the stocks are up, stocks are flying. But if you look at the Russell, or 93% of the equities in the S&P 500, they're going sideways. It's just being driven by tech. I digress. We don't have to jump down the US economic rabbit hole.
No.
36 trillion is it now, or whatever.
Yeah.
But
I think when you have this concentration, right, and we have seen this concentration definitely post 2020 COVID, right? I think there's more and more concentration happen in the tech sector, and now last few years AI, right? Definitely last 2 years, I think, has been AI. So let me come back to, I guess, the topic at hand here, right? So let's talk about Bitcoin, right? And the question I was asking you on the Bitcoin front, right? Bitcoin touched the 82K yesterday, early today.
Correct. Up 80% in 1 month, I believe.
Right. Yeah. So I guess the question I wanted to ask you is, what can you tell us about the direction of Bitcoin from here on, right? It's not a financial advice. It's just we're focused on the data.
Yes.
Are we in the bull market as a whole for crypto, or Bitcoin specifically we can look at, or are we in, bear market? Because I think there are proponents on both fronts, right? People are saying it's biggest bull market. People are saying it's the bearish, bear market right now. So where we are at from data's perspective?
Yes. So definitionally, since late 25, when we topped out at about 120K plus in Bitcoin USD, we have been in a bear market. So the question right now, you just look at a price graph. We've been trending downwards, and now we're looking like it's turning, right? But beware of catching falling knives, as they say, in a bear market. I have been destroyed by buying shorts historically, but I still love trading, and I still love our business, even though I've lost a lot of money on shorts. But in essence, is it the bottom now or not? I think that's the question that everybody's asking, and the short answer is maybe. If I can guide us to some pertinent graphs. Firstly, I'm going to share my screen because I would love to show how this type of question can be demonstrated. So let me just pull this up. So firstly, we will look at the sort of retail sentiment, and then we have got a special chart called the MVRV Z-Score. It's a technical indicator, and it's used to indicate where is there a bottom or a top. And this indicator is certainly shaping up to indicate to us that there is a potential market bottom. So we can see here, this is one of our, I believe, free graphs. We sort of run most of our proprietary graphs we have put behind a paywall, but you'll be able to find this one on plenty of other data sites. This sort of compares Bitcoin's market value to its realized value. And you'll see now that there was an inversion here, 24. So that's looking bullish. And again, this is rising, and this is it seems like there could be an inversion here as well. When we look at the Z-score, it's obviously on a relative basis. There's been sort of various, you'll see here it was about 5 or even up to 10. So it's important not to look at the absolute number of the Z-score. So right now it's 0.68. What does that mean? You mustn't frame it as is it 1, is it 2, etc. The way to read this graph is directionally. And you'll see here, if we zoom in slightly more, just stand by. there's been a directional shift in the Z-Score. You'll see it's closely correlated with Bitcoin, but where there are inversions, you will see that it's essentially a market top or bottom.
I think I've come across this before, right? It's market value to realized value Z-Score,
Correct.
right? And I think I've come across that before. That's why I was, excited to obviously discuss this, because I've not discussed this on the podcast. So it basically shows that if Bitcoin is overvalued, undervalued, or it's trading at fair value relative to what holders actually paid, right? That's what it means?
Correct. Yes. Yeah, you representing it much more accurate than I can. So essentially, is it at fair value, or is it overvalued or undervalued? And right now it's screaming to us that it's undervalued, essentially.
Right.
And specifically the Z-Score speaks about the standard deviation from the fair value. So is it sort of over the fair value, or is it under? And as you can see now, it's over.
So the numbers, right? How do we read the numbers?
Don't focus too much on the absolute number. You'll see it's 2 here, it's 0.5 here, etc. Rather look at the gap between these two graphs. So you'll see here there is a wide gap. This is screaming to us that there is a significant difference between the sort of price of Bitcoin at the moment and the sort of fair value at the moment. Here you'll see in the bear market, when this started in 25, very close together. So we're dropping the Z-Score. Remember, it is also a technical indicator. It's not that we must take a step back and say that with any technical indicator, you cannot worship it. If you trade solely based on like Bollingers, crocodiles, or whatever, or RSI momentum, you'll blow up. It's best way, in my view, to work with technical specifically is to use them as guardrails and not as absolute, binary, lock it in, yes or no. And you'll see here we are widening again and trending upwards. So obviously the graphs are correlated naturally. It's runs off of the Bitcoin price, but that's a key turning point is this widening essentially.
So can I then say, by looking at this graph, that Bitcoin is undervalued right now?
Correct. And fascinatingly, it has been undervalued since Feb.
Right.
Yes, which is actually quite early, and perhaps would be a surprise to many.
Just on this graph, when was the last time you saw similar pattern if you go back 5 years? Did you see something similar in 2020?
So I believe the data, we do actually go back 10 years. We can zoom in here. It's a nice feature of the site. If you want to grab, a certain time frame, you can just click and drag over what's needed. So you'll see this is all sort of relative. Perhaps the log scale will do us better here. Because Bitcoin is so, it has these extreme orders of magnitude difference. It's more effective. We do have a log scale function here as well. Okay, so let's jump in again. There's an inversion, which I talked about. So again, two key concepts when reading the Z-Score is where are the inversions, which is a directional shift, and how wide is the gap, essentially. Look at this here in 2020. Bitcoin's hovering around 9K. There was an inversion with a crash here. So inversion, it's sitting here. It's still below so what does that mean? It's undervalued.
Undervalued, right?
You're correct. So we're sitting below. And this is kind of screaming to you. And look at this big run up here.
Yeah.
Yes. And that essentially explains to you, like, it almost like preempted this section. So Let me just zoom out here and show you what happens after.
And the gap is huge now, right? And
Absolutely. So interestingly, do you recall what happened in 2021?
yes, so 2021 was the time when we had twice, Bitcoin touched all-time highs, I believe, right? It was 65, and then it dropped down, and then it came back again. I can see two peaks, right?
Correct.
2021. And then that was the end of the cycle, as a lot of people put it, right?
Yeah. And then I was just downwards all the way. So obviously, again, it's hard to sort of measure it with the absolute number. So again, here you'll see a significant gap, whereas right now the gap seems quite small, right? So again, Bitcoin has grown in magnitude several times. So when you look at the historic gaps, which are sort of extreme, versus the gaps today, which are slight, it doesn't matter. It's more of, is there a gap or not? Let's say. Yeah. Again, it is still a technical indicator. I would not worship this graph, but it's useful to grab a look at the Z-score and see, oh, there's a growing gap, and this thing is directionally up. So looks like it's undervalued.
Right. Okay. So then why don't we move to the next one? Data is so fascinating because we can spend so much time analyzing from both of our perspectives, right? And we'll be here for next 5 hours.
Yes. Kind of nerd out about this stuff for a long time.
And I think it's very hard. That's why to discuss data on the podcast. So let's talk about the HODL Wave, right? That's another one you guys have. And I believe it's quite a unique metrics as well.
Yes. So this one is interesting. I'd say this is more of a fundamental indicator. So also, if you don't know what any graph means, even if I forget, you'll see that we also have some insight for every graph. So when you're browsing, I think it's useful to know, what does this do? How could this help me? I see a lot of our competitor sites, they just sort of dump the graphs there. And if you don't know what a Z-score or a 1-year HODL wave is, or how it is calculated, it won't benefit you. So essentially, this measures a percentage of Bitcoin has not moved from one wallet for another for at least 1 year. So hodling, that's intuitive, people that are holding on to their Bitcoin. Now this is essentially, you can read all of this, but what this means is, it means the big players are not selling, or they are selling. That's what this measures over a 1-year time frame. This is incredibly useful to identify what big players are doing with their accumulation. Now, this is the all-time graph, I think. Let's zoom just in a little bit. Let's frame it again from, there was a top in 24, a big theme during 25, big theme in 25, and you'll see this directionally on the graph, was a lot of whales cashed out last year.
That's beautiful.
And it was a gradual trend for quite some time. This is very interesting. November 25, boom.
November 25. What happened?
It was a massive wallet sell-off. One of the OGs, it wasn't the Satoshi wallet. It was it's an anonymous wallet that sold off here, and it had like a crazy impact. Again, it's obviously it had a price impact on Bitcoin, but it's just measuring Bitcoin that has not moved from one wallet to another for at least 1 year. So the jump seems larger than it is. It's not like 20% of Bitcoin supply was deleted, but there was a big whale that sold off. Now,
I was going to ask, is it number of Bitcoins or number of wallets that decreased here that you're tracking?
So this is the percentage of Bitcoin.
Percentage of Bitcoin
that has not moved.
I see.
This is about a 2% drop. in the percentage of Bitcoin that has not moved within 1 year, let's say, and that just jumped down.
When I'm looking at the graph, it's going down, right? In this 2 years duration, right? Like
100%,
the
yes.
white line, meaning more and more wallets, the long-term holders.
Ones are capitulating.
How do you define long-term here?
So in this, it would just be for Bitcoin that is not moved for at least 1 year. So when this graph goes down, Bitcoin that hasn't moved for more than a year is now moving.
I'm with you. Yeah.
I think again with many of these indicators, it's good to, they're just a tool, right? It's an instrument. It's not I wouldn't trade just based off of this indicator alone, nor would a single indicator be sort of all revealing, let's say. But I think it's very interesting to see that the trend from 24, 25 was that a lot of whales were just cashing out. I think it got to the point where, they wanted to spend their wealth, let's say. There's also an interesting dynamic where some of the OG holders, the whales, had, a lot of Bitcoin from the early days. They capitulated, but who did they capitulate to? They didn't sell blindly to retail.
No.
They capitulated to other major players. So interestingly, I think looking at the graph at face value, you're like, wow, the big guys are capitulating. And no, it's a structural change where the individual whales capitulated to institutional capital, because that's the only BTC players that can actually take in, let's say, like $1 billion worth of Bitcoin or what have you. So, sorry, one last comment I want to make about the HODL Wave. Interestingly, since this big capitulation, there has been a slow and steady grind upwards. So what does that mean on the graph? It means that the percentage of BTC that has not moved for at least 1 year is growing. And this speaks to larger players accumulating. That's one of the insights that we can pull from this indicator. And I think a lot of pundits and people that were interested in the crypto space were sort of worried that these whales are cashing out, because I think the thesis was, are they losing faith in the entity? Like, why are they losing faith? There's an interesting phenomenon even for me personally. And now that at least since November, the last 6 months, this trend has now reversed. Accumulation is ramping up again, especially by large players. There's more graphs that support this contention. I think, I will keep going for hours if you don't stop me. But
No, I mean,
it is fascinating stuff. Yeah,
this is fascinating stuff, and I think I'm sure all the listeners will and watchers will also appreciate, because there's so much data is magical for me. I don't know. I love data. I love technology, but this is like, you can spend so much time because you're really trying to pull insights, and sometimes there might be no insights there, but you're still end up wasting time, right? So just one point I want to add to what you just said, and then we can move on to the next data point, right? So I think, as you said, rightly so, if a big wallet transferred over to a different wallet, right? These are what we call OTC transfers, right? So there are over-the-counter transfers.
Interestingly, Ankit, this graph will catch OTC movement.
Yes, that's what I'm saying.
Because it measures BTC percentage on chain. It's measuring. This is pulled from Bitcoin. This isn't some exchange API call. And what's fascinating is that Bitcoin price itself will not move due to big OTC moves, because it's not hitting exchanges. Obviously, there are definitely long-term ramifications in terms of price discovery to large OTC transactions. But the trend of, again, the past 2 years, and let's zoom out, large OTC transactions at large, it does not move the prices, because the price discovery is mainly happening on exchanges. So you'll see that, I mean, if that's the definition of OTC, even in other spaces, like in traditional finance spaces, that OTC does not hit the market, at least not directly, and it's kind of a benefit to the guys doing the deal under the table. It's not that it's illegal, let's say, but it's not hitting the market. So the price discovery is not immediate.
Exactly. I think that was exactly my point, that because this is not going to the exchanges, this is on chain, that means these are most likely OTC deals when someone is
Correct.
exiting that
Correct.
position and then passing on to someone else.
Yes. So this massive 2% drop in the 1-year HODL wave, this was an OTC transaction.
Yes, security side, you say dark pools when these big institutions move the blocks from one buyer to another, right? Not many people are aware of it. So on Bitcoin, I think it's a good way to look at how the Bitcoin is transferring from one hand to another. So that's great to see. So why don't we move to the third most important metrics, that was
Yes.
hash ribbons, right? Hash ribbons was another one which I found it to be quite interesting.
Oh, that's fascinating. I've actually looked at that in quite some time. Let's have a look.
It's about the miners' capitulation, right? Not the holders, but miners.
Yes. So, I mean, yeah, I couldn't even name this chart off the top of my head, but here it is, and we've built it. So to you and the viewers, we can discover my own graph together. Well, obviously, right now they are capitulating. You can see here. So if the 30-day falls beneath the 60-day, so that's typical of technical, which they call moving averages cross. You've got trouble or a lot of benefit, let's say. So I mean, yeah, the pink is when miners are capitulating. Interestingly, here they cross, and here the pain starts, and then it's up again. Although, yeah, I mean, it crossed again in 26 now, and I know for a fact that as we stand today, there's still minor capitulation that needs to occur. A lot of the less profitable guys are getting shaken out at the moment. This should also be reflected in the hash rate, I believe.
Hash rate seems to be staying high, no?
Mm. You just see it's come down significantly. So hash rate meaning the amount of mining that gets done, let's say. This is a proxy for the mining activity. It's down a lot from our kind of minor peak over here.
But if
This
you
is
want to extend the
throughout.
time frame, because 6 months might not be enough. Yeah, that's better. Maybe 2 years might be better.
And again, we're looking at this 25 peak. And I mean, looking at this graph, I think the minor capitulation is not over yet. It's just been in a downtrend for basically a year now, let's say 6 months. But back to I think, yes, if you understand hash rate, you could look at this, but
I think our viewers understand hash rate well. Proof of work people understand hash rate.
so it seems like there might be a cross soon. I'm not sure. It's hard to predict the future, even with nice graphs. But I think it could be, yeah, could be bad again for miners if we see this topping out again.
Do you know the cost of production of Bitcoin, right? Do we know, do you overlay that somewhere?
Yeah, we have the hash price, which is sort of measured in USD. See, it's still technically profitable to mine a Bitcoin.
What price of power are you looking at here?
So this is the expected daily value of 1 terahash of mining power.
Okay.
So I think it's important to note here that a terahash per second of mining power, the input compute or the input energy is not being measured, or energy cost. So, I mean, but which is hard to measure. I think I recall a story about, I won't name him, but it's one of my old classmates from my actuarial science class at the University of Pretoria. I'm South African, so that's where I studied. He's also really passionate about crypto, and he ended up illegally stealing power from a main line to power his Bitcoin ant miners. The guy is crazy. I'm not in business with him because I think he's a bit, let's say, questionable, but crazy bloke. And his power cost was zero because he was essentially stealing power, And yeah, how do you measure that? His mining profitability is 100%. Because I mean, but then, like zooming out geographically, if you're sitting on some geothermal plant or like with Iran's Bitcoin mining capacity, they have super cheap energy there. It seems that you just look at the hash rate as opposed to the various ways to generate 1 kilowatt of power, which is like a multitude of prices, and then also compute efficiency, right? Because every generation of miners seems to be more competitive. So I suppose, long story short, we can distill everything into, what is the hash price that you're paying for this hash rate.
Cool. All right. Let's move to another one, which is a beautiful metrics. It's veil shadows, right? So that was
Okay. Yeah.
what I wanted to ask you if you could explain to us what it means, and we can obviously have a look.
Okay. Let's demo shadows here. Can find it. There we go. Let's do the 1 year. So you can see these sort of large spikes. I'll explain why, and it's throughout the whole lifetime of this graph. So what does that mean? So if HODL was a proxy, the 1 year HODL wave was a proxy for large wallets to a certain extent, the whale shadows graph is explicitly exclusively whales, and that's guys with significant amounts of Bitcoin. Again, movements from long inactive whale addresses often signal market events. Again, these large OTC transactions will be captured here. And do you remember that graph, that drop we saw on the other graph in
November, right?
25 November? Boom. That's the OTC transaction major whale selling. It was in the news. It was the wallet is anonymous. You can have a look.
Yeah, I see.
So yes, I think this is a useful metric to, obviously, if the whales move, they move the market with them. Interestingly, I think my hot take is that the whale shadows graph is getting less and less useful as Bitcoin gets larger and larger. I think before you had these whale addresses that they literally shake the earth underneath you, especially considering the early days. Some people controlled like 10% of supply or some crazy number, whereas now with our current market cap, just the size of the asset class, of the entity, a whale has less. The ocean's getting bigger. The whale can't make as big waves. So in my mind, this graph is getting less and less useful. I think the HODL wave graph would be a more accurate indicator for accumulation or distribution of big players. This is also a good metric for it, but again, I think fading into irrelevance. Very useful for, I think, some historic backtesting. And again, a large whale movement can trigger, I think perhaps if you're looking at like the hyper short term, if we look at this here, I mean, this sort of preceded some price action directly after it. Sorry, I just want to get the right. There's a big spike upwards, essentially. So you could have timed this, but again, not my favorite graph.
All right. So let me ask you this, right? At the start, when I did the introduction, I said you have on-chain metrics along with key macroeconomic data, right? So far we have looked at on-chain data, but we haven't looked at how to overlay and how to read this macro on top of the Bitcoin price action, for example. I want to see how can I overlay some treasury yields, for example?
Okay, no, that's 100%. So I've got a whole a macro section here which just shows you, my browser's breaking, which just shows you various of the pertinent macro stuff like inflation. A lot of people were trading the monetary supply. So this is US M1, which is again not seen as often. And this Fed balance sheet got a really interesting one, which measures the US debt to GDP versus Bitcoin.
Versus Bitcoin, that's cool.
Correct. Yeah. You'll see it's essentially highly correlated. Again, I think these are not technical indicators. I wouldn't make trading decisions, but it's more of a fundamental framing.
What about yield? 10 years and 2 years yield. I want to see.
Yes.
Because, I mean, I spent a decent bit of time on treasury. So
okay.
So this is 2 years. Because yields have gone up recently as of, I think, a couple of weeks for both 10 years and I believe 2 years as well.
You can see the 2-year spike here. You can see the 10-year spike here. I can zoom us in even more. The turning point for yields was, look at that, start of the war.
Yeah.
Feb 28, boom.
Yeah.
And then interesting, if we follow the purple spread, that's obviously the spread within 10 year, that's been going down since beginning Feb, which is interesting. But it's obviously at a turning point now. My best bet here would be to it's not intuitive to follow the changes here. I would throw these graphs into AI or Excel if you sort of more proficient and do some time series analysis to get the exact correlations here. That there's definitely some correlations between the turning points. If you see the spread peaks here, the 10-year, 2-year yield spread. So obviously that's the difference between yields on so treasuries are bonds. Yields would be the interest that the bonds pay, and bond prices and yields are inversely related. But essentially, the difference between the long-term and the short-term bonds are being measured. And when that difference, the yield spread so-called, peaked, Bitcoin dropped, which is interesting. Same here.
Spreads there's an entire industry on spreads, like how to read spreads, right? And one thing I was going to say, with these spreads, you have to expand your time horizon, because I think, you don't, because treasuries, it's a highly liquid market, it's the biggest market on the planet Earth, but which means, the spreads takes time for it to move in a certain direction. I was going to ask you, can you overlay, like, typically when you're looking at treasuries, you also look at bonds, for example, which are German government bonds.
Yes, German bonds.
Yeah. or you look at Italian bonds, sometimes their yields, because those are then you start to see the spread difference between 2-year treasuries versus 2 years bonds, right? Or JGBs, which are Japanese, and people can borrow anywhere. They can borrow in Japanese yen and, then convert it to US dollars and work in the US markets, or, so I guess, so you obviously added US treasuries. Is there plan to add others for institutional traders?
Yes. I think we haven't had that exact query. I think that's an interesting one, just to have the other bonds and perhaps combine them. I'm sure we can add that.
Perfect. So what else? I can see ISM, but what else you look at that's quite meaningful to you?
Okay, so yeah, I think some of the metrics, I like to give everything a bit of a quick once over. Big thing for me is, I think fear and greed is useful to look at, what is retail feeling at the moment.
Oh, that's a beautiful one. Yes, please.
Yes. Let's have a look.
I don't think people understand fear and greed. I mean, everyone looks at it, right? It's right there on
Correct.
Coin Market Cap, but I don't think people understand. So let's go through it and let's have a quick chat on what it means.
Yes. So otherwise, other than Z-Score, where you mustn't really look at the absolute number, if it's 10 or 2, whatever, you must look at the relative sizing. Fear and greed, it's an absolute number. It's between 0 and 100. If it's 100, it's hot. People are greedy. If it's 0, people are scared. So red is a little bit too greedy, and green is they're a little bit too scared. So if we maybe zoom in a little bit more, this is interesting to me. The market top 6 months ago, 25, fear and greed, it didn't even get that greedy. If you look at the historic,
Yeah.
no, seriously, I mean,
Yeah, I know what you mean.
historically, we've like topped out at 94 with other market tops. Whereas, recently we got to 71. I mean, yes, we mustn't worship technical analysis, but it almost felt like retail wasn't as interested as before. And that's a recurring theme that it's this thing that's building in the back of my mind, which I think means it's sort of fundamentally undervalued, because it's not interesting in our sort of doomer scrolling, dopamine hit society. Bitcoin doesn't feel like a get rich quick thing anymore. It's boring now. And as someone who invests in the asset and has confidence in its fundamental characteristics, I'd sort of like that, because I think the growth is much more sustainable. And ask any big institution that's buying it. In any case, fear and greed is simply a measure of, is it overvalued or undervalued? You can use 50 as a sort of reasonable baseline. Right now, we're heading up again. I think again this bottom here recently, where was that? Feb and March, people were very scared. Fear and greed, actually, you can just again click drag and you can zoom in. Bottomed at 5, which is like atrocious in terms of this indicator.
That's crazy.
So I think, yes, again, this supports this kind of thesis that the bottom is around the corner or already happening. And again, I think it's hard to time stuff. That's the whole challenge behind trading. But in a fundamental sense, I think a lot of these indicators are screaming that we're turning. I think it could still go sideways for some time, or even get more knocks down, especially with the geopolitical risks in play. If the Iran stuff escalates another round, it'll have another round of impacts on risk on assets. And that includes Bitcoin. And it's very uncertain what happens there. But I think you can model it as there's risk there. Otherwise, it seems bullish for 2026.
quickly, I'm assuming you're pulling this fear and greed index from CoinMarketCap or something similar to that, or
Correct.
right. So quickly, do you know how it's actually? I wanted to get into how the composition of fear and greed works, because I think that's not a lot of people understand. The fear and greed is not just it's a number that we get to see and
Yes.
we look at from 0 to 100, but it's got a lot of different data they pull from. I don't know actually who's the owner or who actually created this metric for crypto.
Correct. So we don't build this one in-house, just like a lot of other guys don't. But essentially, I know for a fact that it's an algorithm that, or an equation that incorporates a lot of metrics. So that's a very good question, Ankit. I cannot answer you.
I can discuss. I know.
Okay. Well, I would be eager to learn. Yes.
No, that's beautiful because that's why I was like, okay, well, while we are discussing that,
I know it's an equation that takes into account volatility
yes,
and a lot of other technical stuff, but how is it compiled then?
yeah. So it's got actually five or six, I think six different variables. So it's volatility,
Yes.
which is the big one, right? So that's the biggest one. Oh, thumbs up, right? 25%, I believe, is volatility. It's got market momentum slash volume. It measures. It's around 25% as well. It's got social media, so it actually tracks chatter on the social media platforms, what people are saying,
Oh,
right?
okay.
So
Just
it's
the usage of the word.
yeah, because
That's fascinating.
you cannot create fear and greed without knowing what is happening on the public platforms, right?
Yes, yes.
Bitcoin
Sorry
dominant.
to pause there.
Yep.
One of the I did some time series analysis on Bitcoin way back in the day, and I discovered something that pointed out that the correlation between like people Googling Bitcoin, like the amount of Google searches for Bitcoin and Bitcoin price was like 90%. So the more people talk about it, the more the price was affected, and that makes sense why it's part of this metric, obviously.
That's beautiful.
Yeah.
So yeah, exactly. So social one you mentioned, right? So we mentioned
Yes, yes.
volatility, volumes,
Momentum,
social media,
and then you said
dominance,
Bitcoin dominance. Yes.
Bitcoin dominance.
Okay.
Then the one you mentioned, which is the Google Trends,
Okay.
it actually does look at the search volumes essentially,
Yes.
and then on top, I think they do also surveys. So they actually
Interesting.
do
Okay.
ask people. I don't know who's on the panel because typically the surveys are, based on the number of people and what their backgrounds are or how crypto savvy they are. I don't know that part of the
Yes.
equation, but it's fascinating because it's sort of comprised of a few different factors, and if you ask me, I think they're the right things to look at.
Yes. Absolutely. Yeah, that's very insightful. I never knew how this index was actually compiled. I found that insightful. Yeah.
So a couple more questions, right? So right now it's for Bitcoin, right? So are you looking to extend it to other crypto? Like, so I mean, I love people know I love Kaspa. So Kaspa, Ethereum, anything else you're looking to expand?
So in the medium term, yes, potentially. I think right now we're building out our API functionality, which would let traders and institutions plug into our data directly, and then sling whatever the hell they want on top of it. So and then coupled with that, an alert system. So I think that's the next chapter for us, is kind of maturing into more of a B2B kind of business. Obviously, keeping our graphs for anyone to see, and then also giving more access to more sophisticated players. And then just an alert system. We're building out a Telegram, email, etc., any platform, you name it, but with a big focus on Telegram, because I think that's the kind of meta in this space, to give alerts of pertinent indicators when they turn. So I think that's coming for us in terms of altcoins. Yeah, I mean, I'm open to the idea, and not in the next 6 months, let's say.
Okay. Beautiful, beautiful. Thank you. So two more quick ones for you. The first one, right? So what's been the most reliable macro correlation that you've personally looked at, right? Like, or it doesn't need to be a platform, but for you, what are the macro factors that you look at when you're looking at crypto price action?
S&P 500.
S&P 500.
S&P 500. It's you can argue or or like deny it, but I mean the data is there. Bitcoin is at lockstep with equities most of the time. It's a risk on asset. So if you want to understand, if you want to trade BTC or understand where it's going, you need to look at equities, US equities.
All right. So then let me ask you my last wrap up question, right? Where are we heading now next 6 months for Bitcoin?
Shoot, don't quote me. It's not investment advice.
No, it's not investment advice. It's just a fun
yeah,
little
no,
thing.
of course. No, I think that's that's why we build. That's why we look at data and build stuff like that, is to try and have a bit of an edge. I think it's sideways for a bit, and then H2 second half of the year, I think it's bullish. Price target, I have no idea. I'm very
Don't
careful.
worry about price. Yeah. I believe we are in all-time highs, right, across S&P, Nasdaq,
Correct.
right? So why? I mean, you can argue that if we are all-time highs, and Bitcoin is moving that direction, right?
See where you're going. Yes, there's a lot you can do to juice up equities, even if you're not economically performing as well, let's say. So I think, I mean, there's a lot of stuff to it, Ankit. There's definitely a risk of a bigger recession, and then BTC and stocks are going down, and yields, aren't looking pretty. And that happens if the war really gets out of control. There are some other landmines. Yeah, I think there's this sort of slow unwinding of this Japanese phenomenon of the yen carry trade. I know we discussed that offline some time ago, and that's, I think, a potential macro landmine. But in my experience, the yen unwinding, and this is my hot take, is controlled demolition. It's going to happen, but they're trying to bring that down softly. And you can see it. I mean, it's constantly like cycling in the news, and it's like, oh, yen carry trade, it's unwinding. If thing unwinded in totality, it would be like Armageddon.